Welcome to class. So on today's class, we're going to learn how to protect the revenue that you've earned, right? There's so much content out there that teaches you how to make money, how to grow your revenue, how to boost sales and all that. This class is to teach you how to protect the one that you have suffered to earn. We'll be learning about the basics of taxation, right? I'm going to make it as clear and plain as possible so that you can understand, right? What is tax? What is even this tax that we are hearing about? So basically, tax is a levy imposed by government on individuals and businesses. It's as simple as that. Government impose charges on us that we should pay in order for them to generate revenue to fund essential public services like infrastructure, road, electricity, education, and all that. That's government's cup of tea. Now, your own cup of tea is what you should know about tax, how it affects you as an individual, how it affects you as a business, and how it affects the future of your business. How do governments collect these taxes, and what type of taxes do governments collect from individuals and businesses? So, just as we have 3 tiers of government, we have the federal, state, and local. That's the same way that they will collect the taxes in that their jurisdiction. So, federal, state, and local. So listen, the federal government has their own arm, which is the Federal Tax Authorities, now known as Nigeria Revenue Service. There are taxes that they will collect from you as an individual and businesses. We have company income tax, we have value added tax, we have withholding tax, we have hydrocarbon tax, we have capital gain tax, and other taxes. For state taxes, the taxes that the states will collect, right, that you as an individual you pay to the state government. We have personal income tax, we have payee, we have withholding tax, we have those are the two major. So hold that. Then for local tax authorities, of course, now local, we have market levies, we have bus park levies, all those kind of levies. So I just want you to have the idea. Now, and the 4 major taxes we're going to discuss is company income tax, value added tax, withholding tax, and personal income tax. So let's quickly learn that. So we have the company income tax, we have the value added tax, the withholding tax, and personal income tax. There are other taxes, but these are the major ones. It is good to read to know about all other taxes, but the key ones that concerns you, that if government comes for you, you'll feel it. You'll feel the impact on your profits for that year. You're not preparing for exam, right? So it's just to know the major ones that affects you, that if government is to come for you, you know that you are safe, right? So for company income tax, it is paid by large companies. What do I mean by large companies? According to the new tax act, large companies is defined as companies that their revenue is above 100 million naira. So if you earn below 100 million naira as a business, you are safe. You don't need to worry about company income tax. But if you know that your revenue is more than 100 million, just know that you are going to pay 30% of your taxable profit. I'll come back to it. Value added tax, from the name value added, it means that any product you buy, there's a perceived value, right? So government will tax that product or service. It can be a product or it can be a service. So there's a 7.5% tax on it. The third one is withholding tax. Even from the name withhold, when you engage in a transaction with a client, you have to withhold a portion of what is due to that client. The fourth one is personal income tax. Yeah, we have the pay as you earn, and direct assessment. So I'm going to treat this one after the other. Pay attention. The aim of this class is for you to understand what tax is all about, the key taxes in Nigeria and how it affects you as an individual, or how it affects your business, right? Because it's not about making money. I made 100 million in revenue, I made 200 million in revenue. Are you compliant? Are you paying your taxes? The aim of this class is not to teach you how to avoid tax. It's how to teach you what tax is and how it affects you. So you pay only what you are legally expected to pay, and not even a naira more. So now let's get right into it. Company income tax. I'm going to be using illustrations so that you understand better. Let's say you have a drinks business, right? And you make revenue for the year. Let's say your revenue for the year as a drinks business is 100 million. Quite all right. Now, there are expenses that you definitely incur. First of all, you have to purchase the drinks, right? You have to get logistics to take the drinks from your supplier's place to your place. You also have to take these drinks from your place to your customer's place, right? Also, you have to store these products, right? You have to warehouse them. It's either you have a shop or wherever storage place you keep it, you have to pay for it. So that can be categorized as rent. Also, you can have a warehouse manager, an inventory personnel, an accountant, or whichever person that's in charge of running your business. It can be categorized as a personnel or a staff cost. Fine, it is allowed, right? Now, in your normal books, you will say revenue, purchases, right? Revenue, you will not deduct your purchases, you will not have your gross profit, you will not deduct your other operating expenses. For the tax authorities, the only thing they know is how much did you make and how much of expenses that are allowed did you incur. That is what they know. If you make 100 million and the expenses that are truly for, there are expenses that are incurred in order for you to generate this revenue, that are directly involved in generating this revenue, the taxman understands it and the taxman will allow you, no problem. You incur 80 million for rent, abi for staff to buy the products, no problem. But if the taxman comes and he sees in your books that you donated 5 million to church, you paid tithes from the revenue, you gave your friend that is needy 2 million, or you organized one extravagant birthday and you also include it as an expense, they will deduct it. They will remove all those things. They will only keep the ones that they know that it makes sense to the ears, that okay, these expenses should be associated in generating this revenue. Like the ones I mentioned, you buy the products, transportation, personnel costs, you pay electricity. You understand all those kind of things. It's fine, it's fine. Now, when the taxman has deducted that allowable expenses, you will not be left with your taxable profits. Now, inside this your taxable profits, that is why it is called taxable profits. The profits, this is the profits that they will tax, right? Inside this your taxable profit, you will not pay 30% to government. Now, this is not all, unfortunately. When you've paid your 30% of your 20 million, you will still pay additional 4% development levy. So you pay 4% of your 20 million to government. So that's it. That's a brief explanation of what company income tax is all about. Now let's move to the second one. Sorry, before we move to the second one, company income tax is due within 6 months after the end of the financial year. What that means is that if your financial year is from January to December, so you have from January to June 2027 to pay your company income taxes. Yeah, so that's that. So let's move to the second one. Now, the second one is value added tax. This is another tax that business owners should be compliant with, because at the end of the day, you business owners, you're not the one bearing this cost. You're not the one bearing it at all. It is the final consumer that is bearing it. How do I mean? Let's say, for example, I'm going to give you two examples. One as a service provider and one as a company that sells products. So if you are a service provider, let's say the cost of your service is 1 million naira. You know that if you factor everything, your profit and everything, it is 1 million naira you want to charge. Please add value added tax. In the contract or in your invoice, make sure you include value added tax, because if you don't collect it from your client and you will be the one to pay it at the end of the day, when government comes, they will not go and look for your clients for you. They will not. They will just say, okay, you made 1 million, Abi, okay, where is our own VAT? So if you don't charge it to your clients, you will pay for it. It's as simple as that. So the best thing for you to do is include it in your contracts or invoice or whatever, and allow the clients pay for it. And that's just one side to it. When you include it and the client eventually pays for it, it is your duty to remit this tax to the government. Because if you eat the money, you don't chop gbese with that too. Because if government comes, you have to vomit it out. So that's that for value added tax for service based. So if let's say you sell food, if your food is 1 million naira, you know you factored everything, your expenses, your purchases, your profits, everything is 1 million naira. Please include VAT of 7.5%. Include it, charge it to the client, and remit it. Because at the end of the day, if you don't, if government comes, you're going to be the one to pay for it. Companies that deals with products, there's what we call input and output VAT. I will explain that in our later class. That is applicable to you. But for now, just know that if you were not including VAT in your invoice, please include it, because government is not joking with their money this time around. They will come for you and you're going to vomit that money if you've eaten it. And if you've not been charging it, start charging it to clients. So that's that for value added tax. Value added tax is due on the 21st of every month, meaning that you should remit it and file on or before 21st. In our later class, I'll teach you how to remit and file VAT. So that's it for VAT. Let's move on to the next one. So now for withholding tax is, like the name implies, withholding. When you engage in transactions, there is a portion of that um money that is due to the vendor or the service provider, right, or the consultant, that you have to withhold and you remit it to the government. Now, the good thing about withholding tax is that money will serve as a credit to the vendor or the service provider or the consultant, and he can use it to offset his future tax liabilities. Let's say in the future he wants to pay company income tax. The credit that he has on his tax account can be used to net off, right, his tax liabilities. So I'll give you an illustration. So let's say a consultant charges you 1 million, right, for the service that he wants to render to you. Now, instead of you paying that 1 million naira, you will deduct 5% from it, right? And you will pay it to the tax authority. Withholding tax can either be due to the federal government or the state government. If you are dealing with companies, let's say the person you are dealing with is Coca-Cola or a company, right? That withholding tax will go to federal government. But if it's an individual, let's say V is dealing with Emeka, V is dealing with John, like individual, the withholding tax will go to the state government. So back to my illustration. Let's say the consultant charges you 1 million naira. Instead of you paying 1 million naira to the consultant, you're going to deduct 5%, right? Which is 50,000 naira. And you're going to pay that 50,000 naira to the tax authority and pay the consultant 950,000 naira. If the consultant gives you an invoice or in the contract, there is VAT on it. So if the consultant gives you an invoice that has VAT of 7.5%, you will not deduct the 5% from this 1,075,000 naira because that will be double taxation. I will explain that in our later class. VAT is already here. You can't deduct another tax again on it. So you deduct the 5% on just this 1 million naira. So that same applies to products, right? If the product that you are buying is 1 million naira, you also charge VAT of 5% on it. It depends. If they are supplying you products, it won't be 5%, it'll be 2%. But as time goes on, you understand the specific types of VATs and their rates. So let's move on to the fourth one.